Today, we're analyzing a topic that blends Wall Street, John Madden, and believe it or not, the Saudi Public Investment Fund. Electronic Arts, the video game giant known colloquially as EA, is reportedly drawing takeover interests from Silver Lake and Saudi Arabia's Public Investment Fund. That's right, your next Madden or FIFA game might come with a side of geopolitics. So, what does this mean for investors like you? How do deals like this ripple through markets, portfolios, and even your retirement accounts? I'm Terra McBride, Chief Marketing Officer at Prime Capital Financial, and here to share the Konami code on this topic are my colleagues Will McGough, Deputy Chief Investment Officer, and Clayton Allison, Portfolio Manager. Before we dive in, don't forget to scan the QR code and download our free guide to private investments. In it, we share the basics about private investments and the potential risks associated, giving you more context to the conversation today. Okay, let's get into it. Starting small, Clayton, are deals like this typically good news for retail investors, or does Wall Street end up pocketing most of the upside?
Well, it's a great question, Tara. And, objectively, I'm a big video game player, and I used to be a big EA fan to begin with, but I haven't bought one of their games in quite a long time, so maybe this will kind of spur a quality readjustment for some of their games. But to answer your question, whether or not retail investors can really benefit from this particular transaction, I'd say really if you happen to have already held EA shares at that point, you would be more prone to benefit from this because obviously they're going to pay a premium to then take EA private. That's what is going to end up happening. These shares are no longer going to be public. So average retail investors like myself and others, going forward, we're probably not going to be the ones that are going to see the gains and growth in this company from an investment standpoint because we can't buy those shares unless we're able to invest in the private equity funds that are able to get private offerings of those shares. But for the vast majority of retail investors, it's going to be largely locked away behind, a new key and lock. And really, it's going to be the investment funds that have taken this company private that are really going to see the unlocked potential going forward.
I can still hear the EA Sports, it's in the game. Like, that's some great marketing. My marketing heart gets really happy about stuff like that. But a lot going on for them. So sticking with you, Clayton, Saudi Arabia's Public Investment Fund is in the spotlight again. They've already poured billions into sports, entertainment, and tech. What's the strategy here, and why should the average U.S. investor care about where sovereign wealth funds place their bets?
Yeah, well, we'll keep it just about the Saudi investment fund for the current moment. But two main things is obviously Saudi Arabia's main export and driving force of their economy is oil. So this is potentially one way as they go forward into their economy to start diversifying away from just the energy sector and oil prices at large to kind of give new avenues for GDP for their economy. But on top of that, one thing that investors need to keep an eye out for, especially when sovereign wealth funds are putting money into this, is they are able to deploy huge amounts of capital very, very quickly. And so when the Saudi investment fund, for instance, decides to put money into a particular company or sector or different secular trend, they're able to move markets almost instantaneously just by announcing that they're putting the investment in there. Because, like we've said, they have copious amounts of money from their oil fields and from their energy composition of their economy that they are able to then deploy. So as a retail investor, if you hear kind of murmurs of that the Saudi investment fund is going to be putting money into a particular company or things of that nature, it would not surprise me to see those shares of that particular company in that instance be moving quite wildly very quickly and obviously getting a little bit of a pump of that new influx of capital.
So even countries diversify their investments, right? So, Will, shifting over to you, we've been hearing the term sports washing more and more. And for those who don't know, this term essentially means using investments in beloved global brands to clean up a controversial reputation. How should investors think about this? Is it just PR, or does it have real implications for the companies and industries that accept this capital?
Yeah, thanks, Tara. And that was actually a new term to me, so I had to look it up as well. And I typically go to Urban Dictionary to get a more fun version of the definition. And they actually kept it pretty clean. It's the use of sports to present a sanitized or friendlier version of a political regime or operation. And so if you think about it, there's some negative connotation around the Middle East. Won't digress into those reasons here. But as Clayton just alluded to, they've got a lot of capital because of their oil export brings in a lot of money. What's interesting here with EA is that they're an investor already in the company. I think I read that they own about 9.9%, and they're going to roll that over to be a private equity holder going forward too. So in this case, the Middle East did FIFA. You saw news earlier about the Patriots selling a 10% stake of their NFL team. So I think that sports washing is just a fancy term, but because sports are so popular around the world, that they're actually decent investments.
Yeah. So, I mean, it's important that we understand the context of all of this, right? And we've seen sports washing is an interesting term, just to kind of give a name to it, but it's something we should pay attention to, right? So, sticking with you, Will, when sovereign wealth funds become major shareholders in American companies, are there hidden risks like political leverage, supply chain influence, or even regulatory backlash? And how do those risks trickle down to portfolios for investors watching this?
Yeah, it's a great question. And so we've been talking a lot about the Saudis here. Norway and China also have big sovereign wealth funds. By some research with Grok, they hold about 3 trillion globally. So big investors. And with any investor, you have to understand their motivation. You see it with hedge funds and activists here in the States, trying to change companies. Different set of risks, as you just mentioned, with sovereign wealth funds. They're certainly political because they are an investment arm of a country, so they can pressure companies for access to their data. With regards to supply chains, they can shape the sourcing decisions and figure out, how their home country suppliers could have more exposure to their investments. With regards to the regulatory backlash that you mentioned, the U.S. actually passed the law in 2007, the Foreign Investment Act, that helps scrutinize some of these things for foreign national security. Won't digress more, but Jared Kushner is also a private investor in this EA takeout here too, so that's another interesting angle. And so you got to watch, the AI, the energy plays with regards to various things the administration is working on. What does this mean for the individual investor? It's just one company. It's 55 billion, so it's decently big. It would probably be the 6th largest private company that's out there. And so if you need to get access to private investments, if this trend continues to get bigger, private markets go from 3 trillion up to what, like the US equity markets are 50 or 60 trillion, you're going to need to get that exposure in your portfolio. And the only way to do that is working with an investment advisor and a financial advisor to help understand your propensity to be able to invest in private investments given their liquidity risk. And so I would just kind of come a broken record here, talk to your advisor and figure out the best means possible to get that type of exposure in your portfolio.
Yeah, that's a message worth repeating. And, these things, everything's shifting, but it's always important for us to talk to a professional, understand, again, the context around what's going on behind the headlines. There's opportunity there. There are things to pay attention to with respect to your own portfolio and what you're interested in and willing to invest in. So it's great to have this additional context. Will, Clayton, thank you. Clearly, this story isn't just about video games and cheat codes. It's about who controls capital, how reputation shapes investment, and what that means for everyday investors. If you want to gain additional context to what we discussed here, make sure to grab our free resource, A Guide to Private Investments. Scan the QR code on your screen or click the link in the episode description. Big thanks to Will and Clayton for your insights today, as always, and to our audience, thank you for sharing your time with us. We hope you found it valuable. Remember to stay informed, stay invested, and we'll be here to help you navigate the twists and turns of the market. Until next time.